Hey guys, welcome back. In today's video, we're going to take a look at a live trade that I took today on SPX. That of course is the cash index for the S&P 500. This is another zero data expiration trade, which involves trading option spread, specifically an iron condor on the SPX, and essentially selling credit, looking to keep as much of that credit as possible throughout the day. So this is a trade that lasted many hours. So we're going to pick up the action kind of mid-morning after I'm already in the trade. And obviously I kind of pause the video throughout the trade and come back and discuss changes that are made and just my observations throughout the day as the day unfolds. There was definitely one point during the day where the spread was pressured and we were quite red, but we were able to get out green and really good to finish the week like that, basically making back the loss from Wednesday. So I still have a lot to learn. I'm really enjoying learning this strategy, but I know I have a lot to learn, a lot of ways to improve. Especially when it comes to making necessary adjustments and everything else that's involved with the strategy. So if you guys are new here, I'm Tex and I share my journey with trading and investing in the stock market. I really appreciate you guys dropping in. Let's go ahead and roll the intro and we're going to jump right into the live trade. All right, good morning, guys. It is almost 10 o'clock my time, 11 o'clock Eastern, so we're getting through the morning session here. Just going to update you on this trade that I'm doing, zero data expiration trade on SPX. So you can see I have a full iron condor open. It was opened separately. I opened the put leg first and then the call leg. So we're in with the 39.05 put short and the 38.95 put long. So pretty narrow spread there, only a 10-point spread. On the call side, we're short the 39.50 and we're long the 39.60. Really was playing off of the delta. You can see right now with the market pulling back a little bit after pushing this morning, we're perfectly delta neutral here. So that looks really good at the moment. So hopefully we can get through today without having to do any real big adjustments. We'll look at the chart here in just a minute, but going to the table view here, I was playing off of just really the deltas more than anything, looking at the expected move that we had today, this brown shaded area. I shorted the put leg first here. I shorted the 15 delta. You can see it's still hovering right around 15. And on the call leg, I shorted, I believe it was right about the 15, maybe the 16 delta here. So as of now, we're looking really, really good if the market can just have a little bit of a consolidation day. Let's jump over to the chart here. You can see, there's the iron condor. So obviously this is what I want. I want for SPX to stay somewhere in here. And if we go and take a look at, these charts here, I was watching this hourly trend this morning, and I took a couple of trades already. I did an iron fly this morning when the market was really trading sideways, but I actually ended up executing the wrong strike, let me just pull this up over here for you. If we open our close positions, so the first iron fly I believe I did was here. I shorted the 39.25 put and call, and I was off on I wanted to do it right at the money, and I was off based on where the market opened. I had it set up in pre-market and forgot to adjust it, executed the order, and the market started pushing up. So I ended up taking that off for a $100 loss, and then I reopened a second iron fly that was right at the money, and I think it was a little too narrow, so it just wasn't decaying fast enough. We got in the money by about 75 bucks or so, and I was looking to get 100, 150 out of it, and just couldn't do it. The market broke this this trend that I just showed you over here. Back over to our charts. When the market broke this trend, I took it off for a $20 loss. So I lost a total of $120 on the iron flies this morning. And then initially, when the market broke trend, I was going to hedge with an MES position. And then I got a little bit faked out on that and just decided, okay, let's just calm down. Remember our lessons that we learned, patience being very, very key here. So looking at this position right now, I was able to collect $814 net credit after fees and commissions. So when you look at the gross here, obviously there's a lot of extrinsic left in this. There's $735 in extrinsic in this. Now, obviously, I'm not going to be capturing all of that, but I would like to capture a chunk of that. Now, I have I have some, maybe it's easier from this page for you to see. Let's just, yeah, just today, and let's just filter by SPX. All right, so I have some working orders out to cover these at 15 cents. I got filled on the first leg here, the put leg, at 80 cents, and then I got filled on the call leg at 90 cents. So if we can get a drop down to 15 cents, that'd be nice. But if the market doesn't want to do it, then we could look at taking it off for maybe 20 or 25 cents. I really would like to get at least 20 or 25 cents. So we'll see. Right now, looking over here are these. Let's go back over to this trade view, and we can look at it on the curve view here. But looking at those working orders, we've got the call leg here. Mid price is trading around 62 cents. So we've got a ways to go to get down to the 15 cent mark. And then on our put leg, mid price is trading around 73. So I mean, we're a little in the green right now, but not very much. We need more passage of time. So we've got $150 open at the moment, but that's pretty much where we stand. Now the only other position that I have open is this Amazon broken wing butterfly, and this one was essentially you can see I'm short 2 contracts of the 29.30 puts, and then I'm long the 28.10 put, and then I'm also long the 29.55. So the 29.30, if we go and look at the chart here on Amazon, you know what, let's go and look at it over here. I think it's a little bit better. Let's pull it up over here. All right, so if we go and look at the chart on Amazon here, so you can see I'm short the 29.30 puts. So that is right about here. Here's your 29.30. So if Amazon were to have some outsized move and come right over those 2 short puts that I'm at here, I would get max profit on that trade, which would actually be, let me just look at that. So max profit on that would be about $2,500. Now, right now, it's not looking like that's going to happen. Obviously, I would need it to close right over those short puts at 29.30. So we're talking about breaking this major support level here and falling below that, and that's probably not going to happen. But even if it were to trade down to the 29.50, I would still make 29.50. I would still make, if it closed right at 29.50, I should say. Looks like I would make, let's go back over here so you guys can see this. So zoom in on this, 29.50. I would still make about roughly $500 or so. The beautiful thing about this trade, though, is that even if it doesn't come down and it stays right where it is, I get to keep the credit I collected. So I literally got paid to put this trade on. I got paid $53 to put this trade on. As you can see, there's absolutely no risk to the upside. And there's really no risk to the downside all the way down to about 29.04. So 29.04, Amazon would have to come all the way down here. So obviously that is way bigger than its usual daily range. It's not that it can't happen, but at this point it's unlikely it's going to happen today, and right now it's looking like it's probably not going to come low enough to collect anything more than just the credit I received. We would need to come at least to, what is that, below 29.55. We'd have to come below 29.55 to get anything more than that $53 credit I received. So we'd have to come all the way down here. So it's not that it can't happen still, but it seems a little bit unlikely at this point. So I'm going to leave it on for right now, and then once we get into the afternoon, if it appears that Amazon isn't going to be making that move down, we'll just go ahead and close it off so that we make sure we don't get exercised or assigned anything on anything that's in the money. But we're going to look at this. I guess right now nothing is actually in the money, so we would be okay to let this expire worthless and keep the full credit as long as nothing's in the money. So that's it. Really not much going on there. So far, SPX is working out really well. It's still early in the day, obviously. Let me just go back to our ES chart and take a look at this. I kind of like what I'm seeing here. A relatively small body day, and as long as we just kind of hang out here, we'll be good to collect a lot of that extrinsic value. Going back over here. I apologize, guys. I had to add this audio in after the fact when I'm editing. I just realized that my recording software didn't have the audio input set up correctly for the screen capture here, but what I was describing at this point in the video is talking about the tick distribution here on the New York Stock Exchange. You can see how it opened with a gap up, pulled down to the zero line, and was pretty much consolidating over the zero line, and wasn't until a little bit later in the morning here that we started getting some moves below that zero line. But in this candle here, you can see we're spiking back up over the zero line. So I was just talking about monitoring that. Now looking at the breadth and talking about how it's positive 2 to 1, so slightly bullish, trending up and just basically pulling back here. So just watching this uptrend here in the market internals, and of course on the S&P 500. And then moving over to the advanced decline line was just talking about the fact that we opened up quite high there with 1500 and the possibility of having some type of a fade. So I was kind of thinking that the risk was more to the downside today, especially given that we've seen volatile moves, liquidation breaks. Just continue to monitor the trade at this point in time, and I will update you guys if anything changes, if anything gets filled on our take profit orders here. And so we'll check back in a bit. All right, guys, just another update here. It's about 11:30 a.m. and right now we're doing okay. Delta's a 26.85, so we're fairly delta neutral. Sort of coming back down towards that put leg side now. But we are sitting again here to sell the call leg at 15 cents. Mid price came down to about 20. It's hovering around 30 right now, so that could get filled kind of soon. I've got a secondary leg in here just in case on the put side. In case we start to come down lower and start to test this put leg, I'll readjust down there. We'll see how that's pricing, obviously, if that does happen. Take a look at the market. So you've got ES here that tried to break this trend and has since fallen back below it. Right now we're hovering right over the previous high day here and that daily 9 EMA. So we'll have to obviously monitor this because our short, our put leg is 39.05. Now that's on the cash, SPX cash. It's going to be slightly different than the ES futures, but it's not too far away. We're looking at about here, and this unfortunately is 15 minutes delayed, but 39.05 is down here, so there's a chance that we could certainly get tested. Really what we want obviously is as long as it closes above 39.05, but we're gonna feel some pain if it comes down to test that leg even before the close. So we will continue to monitor this. As of right now, there's not really anything to do. Going back over here, I do have, my MES ready to go in case I need to start thinking about hedging, but obviously I don't want to necessarily do that too early because you can end up losing more than you really want to. Amazon's still sitting good right there, not much to do with that. As I said, it's not looking like we're gonna get anywhere near our max profit zone on that one, which is fine. I mean, basically, just keep that credit there. But looking at SPY or SPX rather, we've got 240 open here. So making back a little bit of the $120 loss from this morning. Still $600 or so of extrinsic value in these contracts. And we're starting to push up off of the bottom now. So, like I said, right now it would be perfect being a Friday if we just had a nice consolidation day. And looking at the daily chart, that's kind of what it's looking like. I can't imagine there's a whole lot of people that want to go long into the weekend. So really, I would think that the danger would be more to the downside at this point. But we will obviously continue to monitor this as the day progresses. Hopefully we start to look at getting out of this position around lunchtime here within the next hour or two. I really don't want to hold it the entire day. So even though there is a lot of extrinsic value left here, I'm not even going to get anywhere near to trying to collect all of that. So So I will update you guys in a bit, and we'll just see how things develop here in the next half hour or so. All right, guys. Still sitting here waiting on this trade to play out. I took down my order for the individual legs and decided to throw out a full take profit order here for the Iron Condor as one. So would be looking at, if I can get it at 85 cents, would be looking at taking a $425 profit on it, which I think would be about 50%, maybe slightly better. We'll have to see. You know, right now the mid price is trading about $1.20, so we've got a little bit more time that needs to play out on this. We're sitting pretty much delta neutral, not quite. A little bit more towards the call side right now, as the market did push up off of the low, but 2470, negative 2470 on the delta right there. So we'll just keep monitoring this. Let's just look at the charts again here. So you can see, you know, market's pushing up now. It's getting back up towards that high of day. That R1 resistance is still overhead here. You know, we've let's go over here to this chart for you guys. You know, we're still pretty much in the middle of the range. You know, we could push up a bit more and not be overly worried. I just can't imagine that there's a lot of people that want to buy this up into the weekend going in long. Based on the weakness that we saw, but we'll see. Looking at the market profile for the NASDAQ and the ES as well. And so far everything is pointing toward balance, but you know, if we get any kind of a sudden volatility in the market, it will probably evaporate these profits pretty quickly. So we'll have to monitor this. Obviously we're losing a little bit now as we push up towards that call leg, but so I will update you guys in a bit. Hopefully we can get filled here sometime soon. I don't want to hold this too long. It's real easy to see your profits just evaporate on this, but so far no adjustments needed and no hedging at this point in time. Alright guys, so just another update here. It's looking like our call leg is getting threatened, so I'm going to go ahead and throw another order out here for a call leg above that one. We're going to be shorting the 39.55 call and going long the 39.65 call, so we'll just put that order out there for $1.30 credit. Mid price is at $1.27. And we'll just get back over here just in case we need to start thinking about hedging with the S&P futures contracts here. Just take another look at this. Mid price is trading at 122. I wonder if we need to adjust this. I really want to see if I can get this filled here at $1.30. So, oh, there we go. All right, so we got that filled. So we are in with our second call leg. And so, yeah, so we're going to run with this for now because I think the market is maybe finding a top here. If not, then we will just pull this up and see what this is pricing at so I can make a note of this. But if market breaks high of day, we'll take off our first call leg, of course, and run with this new call leg and possibly look at adding a put leg. So let's go ahead and run with this for now, and I'll come back and update you in a little bit and see where we stand. Alright guys, so it is about almost 1:30 in the afternoon here, just checking in. We've watched our profits evaporate and now red on the day. Really kind of sitting up here where I'm about to have to stop out on one of my call legs. So I did make an adjustment. I added a second call leg a little higher up. This one here, I went short the 39.55 and long the 39.65, kept that 10-point wide spread. And we are essentially going to probably have to stop out of this one here, this 39.50 and 39.60, if we continue to push up here. It's currently trading at about 2 times my credit received, which is right about my stop loss, 2 to 3 times the credit received. So we don't want to let that go to a full loss. Obviously, that would be like a $4,500 loss if we let it run to expiration and it closed out of the call, out of that call spread. So we will see what happens here. Taking a look at the chart. here was our original call spread here, this white line, and you can see obviously we are really testing it. I added the second spread so it gets us a little bit higher here, and if we continue to push up, I'm probably going to take off this call spread, add another put spread, and maybe even hedge with a futures contract. We'll see what happens, but if we take a look at the charts here, you can see where we are, right? Hourly chart had this big run up. We're currently testing this prior high day from a couple days ago. Look at the 15-minute chart. We're seeing some sellers up here, but if we switch this over to a 5-minute chart, it's just consolidating, possibly flagging here. So this looks bullish, unfortunately. So I might end up having to take that. I don't want to do it yet, but I might end up having to take that first call leg off, and I might also hedge with the futures contract if we do continue to push up here. So just going back over here, obviously, our delta is very skewed right now. So there's a lot of extrinsic value in these contracts if I were to hold everything. But like I said, if we continue to push up, I'm gonna have to dump. This call leg right here. So I'll just go ahead and get this loaded up and ready to go. And go ahead and get this ready to sell for a loss if we do push higher here, and then maybe look at adding a second put leg somewhere down here, wherever I can get some good credit. So I'll come back and update you guys if we make any changes here. All right, well, we got filled on the call leg, so that secured, let's see, I can't see the profit there. I go to our positions page, and so our P&L open right now is $250. P&L on the day is $185. So market's pulling here. Probably should have been a little bit more greedy with that call leg, but if I'm being honest, it was not making me comfortable up there. So the put leg right now is at about 50% profit. So I'm just going to monitor this pullback here on the market. And as long as things don't get too crazy, we should be okay on that put leg to get a little bit more value out of it. Now, because of my horrible trades this morning on the Iron Fly, I ended up giving back, I guess, about 120 bucks on that. So, not really walking away, honestly, with very much profit here. We are up. I guess 560. So I'm sorry. When we take away the closed positions right now, this is what we're up on our open position. So forgive me, I'm still learning this platform. So yeah, not actually a bad day. Better than I expected. So we're still up 560 here on SPX. I do want to watch this pullback here. I don't want to give back. I don't want to go red on this. Obviously, we're up nicely here on this position. So. So I will update you whenever we close the position here, which hopefully shouldn't be too much longer. I don't want to hang around in this all day. So we'll come back and update you very shortly, hopefully. All right, so just a quick update here. I'm probably going to be closing this out pretty quickly here. The market is starting to pull. So I'm looking at this chart. There's a pretty big pull here on this 15-minute chart. So, we're going to be risking giving back profits if it were to come crashing all the way down. Obviously, I think it'll pop. It won't just come straight down. It'll pop before it comes all the way down here. We'll have to see. Hopefully, we catch a bid here pretty quickly, and we start to pop up. Maybe come back up and retest this high here, and that's where I'm going to look at going ahead and getting out of this put leg. If we go back over here to Tasty Works, you can see, I'm still up $215 on that put leg. There's still, $185 in extrinsic value in those contracts, but of course I would have to hold it to the close, and that's not the plan. Originally, the plan was to be out of this trade quicker than I was, but and also in hindsight, I think probably what I did wrong is I got out of the two call legs together, and I probably shouldn't have done that. Probably what I should have done is gotten out of the first call leg, the one that was being threatened here, this 39.50. Should have gotten out of that one for at least break even, if not a small profit. Let's see, what is that trading for right now? Yeah, see, it's trading at 50 cents right now. So, I could have easily gotten out of that for break even or even a small profit, and then left the other call leg on for a little bit longer to try to get some more of this move down, right? So, I think definitely I could have managed that better. Should have taken off that first call leg, this one here, left this one on for just a little bit longer to see if we could get some more profit out of it. So, all right, so what I'm going to do, like I said, I'm going to watch the market here and see if we can't pop back up a little bit from this pretty hard pull off of the high of day, and then look at selling that put leg on the bounce. I don't want to sell it when we're literally pulling back right now. But I'm also not going to let this go red on me. I'm not going to let this go red on me. If it comes down to it, I will cut this off, break even, and at least we ensure a profit on the day. So it's going to have to really keep pulling pretty hard for that to happen. Most likely we'll get some kind of a bounce before we get to the point where we'd have to cut this off, break even. Now on our Amazon trade, it's still looking good. We're probably going to end up keeping pretty much full credit on this trade. And so we'll probably end up closing that out here at some point this afternoon as well. So I will come back and update you guys here in just a bit when we look to take off this last put leg here on the trade. All right, so that closes out the SPX 0DTE expiration trade, locking in $535. So I believe that makes back most of the loss from the last one. And honestly, I'm happy with the trade. Certainly, when we look at this even takes into account about $120 loss or so originally this morning that I took on the iron butterfly, the 2 iron butterflies that ended up not working out. So the jury's out for me on that particular strategy, but finishing up 535 after that loss in the morning is certainly a good way to end. Of course, I still have my Amazon trade going, but that one looks like it's probably going to looks like I'm just going to end up keeping that full credit on that and not really have a home run trade out of it. But when we look at this SPX trade, if we go to the chart, I mean, it looks fantastic now that we've gotten this pullback in the market. And kind of what I'm learning with these trades is that they can really test your patience because of the fact that when you get a trade that starts to put pressure on one of your legs, you're going to be in the hole, and it comes down to making the necessary adjustments in order to try to keep the trade profitable. So usually, what you would do, and as I understand it, again, I'm still learning this, guys, so I'm by no means an expert. You're kind of learning along with me. But usually what you do in a situation like this, when you have something pushing up and testing, your call leg in this example, what you would do is first take profit on your put leg down here that should be nicely profitable, and then open a new put leg higher up, where high enough up to where you can get good credit. And kind of from what I'm learning is going with about a 15 to a 16 delta seems to work pretty well. So right here I'm looking on the call side, and the closest thing we have is a 19 delta. Then you go down to a 10 delta. So maybe go with the 19 delta and then do that 10-point wide spread, and that's trading at about $1.10 right now. Yeah, it'll be if you wanted to bump it down to that 10 delta, this one's trading at 45. So you could do something like that. That's a little tricky. 15 to 16 seems to be ideal. Obviously, you go up to 19, and what that does is it's moving you closer to in the money, right? And here's that brown bar, that expected range we talked about. So you do something like that, it's putting you pretty close to in the money, and obviously there is some risk with that. If it keeps coming down, it's going to really put pressure on that. But the idea, again, I digress, is that you close this put leg, open another one up here. Of course, you have to close this call leg for a loss. And then you pretty much just have to be patient with it and wait for the market to kind of give you an indication that it maybe is topping out or certainly finding resistance, and then you can look at maybe adding another call leg higher than your original one. And you just have to keep adjusting the trade that way as you can to try to keep it profitable, essentially. You do have the option, of course, to hedge your position. You could come in here, and once you have an iron condor open, you could come in and buy a naked call to try to hedge your position. That would be one thing that you could do, and then maybe try to sell pretty far out of the money credit spread to finance that call. So if a naked call is going to cost you $500 or $600, you might be able to raise enough money from doing a further out of the money credit spread to finance that call. So essentially, it's a free hedge in that case. That's the idea. The other thing you can do is with futures, which you can see I tried to do here. I took a couple of trades, and I just I didn't really trust that the market wouldn't have some rug pull like it did end up doing, but went much higher than I expected. It was a slow grind up all morning. I'm happy that I was able to get out with only the one adjustment. It was like I said, a lot to learn, a lot of things I could have managed better. Certainly, I know that for sure. But I will wrap it up there, guys. I hope you did enjoy this video, and make sure that you hit that like button if you want to see more videos like this, and post any comments or questions that you may have about this new kind of trading that I've been working on down below. All right, guys, have a great weekend. Thanks as always for watching. Take care.